Hi, this is Randy Finney with Right Side of the Chart, and today is Monday, June 14th, 2021. It is almost 11:30 Eastern Time as I'm starting the video, and what I'm going to do is an update on the markets, the major stock indexes, touch on the financials and industrials, as well as I want to just also include basic materials. Basic materials don't have the weighting, as large a weighting as the financials and industrials, but it is worth noting right now. That will also, when I go over the broad markets and those sectors, those are top sectors of the S&P 500. That'll segue into a quick update on the VIX. Then we're going to look at gold real quick, just a brief update. I posted a couple charts with trade ideas. Closed a short, reversed a long this morning if you're an active trader, but more importantly, we got that breakdown on the 60-minute primary uptrend line. Update on lumber, commodities in general, and then time permitting, I'll just do an update on AMC and the cryptos. The pretty much the Reddit or meme stocks, they call those. All right, starting out here with the S&P 500. Here's our primary trend line right here. This goes all the way back. We roll back here to the March lows, March of 2020, right there when the pandemic first hit and took the markets down. So that again, that one's been taken out, back tested, but we're just kind of drifting sideways. I've made again, I don't mind making calls, and make enough calls, you're gonna eat crow. But I'm calling for a high in the S&P. I made that call last week. I think that's we'll see. I think the S&P is pretty much top. Give or take a couple percentage points, and a large part is because we had the sell signals on the financials and industrials that I've been waiting for. But either way, a little bit of work to be done. There's my BOD, or benefit of the doubt, trend line. We're just above it. That should help seal the deal. And minimum pullback target right now in the S&P 500 is about that 404.30 level right there. But again, that should help if and when we take that out. And something to keep in mind, guys, is, and we'll see this. This is what I'll be looking for. And again, this is sort of a charts I'm watching video that I'm doing, all the things I'm looking for. We have big divergences right now on the daily time frame of the S&P 500. So that helps the case for a sizable correction. This is, again, a daily time frame. And remember, stocks tend to fall a lot faster than they rise. So I think that 404 support will get taken out. And if it does, especially how we do it, what I'm looking for are some pretty big candles. Once again, if I'm correct on this call, the selling will begin to start to accelerate at some point, especially when some of the stocks and sectors that I'm about to get into, those break down as well. And then I think, as usually is the case, we'll probably see months of gains right here. All these gains wiped out in a matter of a mere days or just a few weeks. Again, that's if that level 404 is taken out, that's going to wipe out all gains going back to the beginning of April right there. So that's what I'm looking for right now. Volatility is low, and that's why I'm going to talk on the VIX as well, because you want a lot of bang for your buck. If you can nail the timing, get in early on a correction before everyone else realizes it. Usually the VIX hasn't yet moved too much, and if you get you can call a 10% little run-of-the-mill 10% correction in the stock market. The VIX can go up 50% or more easily on that. So we'll get to that in a second. All right, so that's that. Let's not spend too much more time on it. There's some additional levels, potential targets for the S&P. I think you can make them out here. About 411 support there for 397, 385.20, 373.20, and 364 and a quarter. So give or take. QQQ. Really, same story, multi-month trading range going back, turn off all the levels here, and this is what QQQ has been doing now, moving around for the past, really in that range for months now, over 5 months. And again, it will most likely go down with the S&P if and when it does. There's a little minor trend line you can watch for there. Divergence continues to build. Any marginal new high in the Qs right now, actually we're right there. We're almost at an equal high, and I'm talking about this previous high from back here on April 29th. And so that effectively gives us at this point, extends this negative divergence right there. It's potential divergence because what we need to see and what I want to see is a crossover in the PPO. So So whether we pop, make a marginal new high or not, get a little bit above there or not, we'll still, at least anytime soon, we'll still have that divergence intact. So that's how that looks. We look at the futures. Here's a trend line to watch right there on NQ. This is a 60-minute chart, so these are hourly candlesticks. On a 60-minute chart, we had that divergent low there. That was a catalyst for this move up. We put in a small divergent high right here, had a correction on that divergent high, and now an even larger. That same divergence has only grown larger now. Actually, let me call that separate divergence. It has grown larger. That's how we extend the divergence. You can see that divergence has been building, and this would be your trend line to watch right here. Breakdown of that level should bring NQ down a bare minimum back to that 13,633-ish support / former. That was a target before. And then on ES, let's see, I haven't updated that one in a little bit. Let me grab that chart. Here's what it looks like. We just moved the first down marker for the divergences, so to speak. And the divergences are only larger now than they were at the last update. And so there we are. I take this line right there. That was the last time I updated this chart online or on the video. And there's a nice trend line that's starting to set up right now. You can see as well. Let me put it down here. And by nice, I mean quite a few reactions. We have that major low back here in early mid-May. Another reaction, another reaction, another reaction, another reaction there. So this is just a big wedge type pattern right there. And just like we had a big divergent high right there, about comparable in scope. I'm talking the scope of the divergences, and that led to that drop there. I see nothing less than that, and you can see potential targets there on ES. RTY, small caps, you often get more bang for your buck when you get a correction trading the small caps, just like they tend to go up more during a rally. These are higher growth companies. They have a faster growth rate, hence the higher volatility, and they're also smaller market caps. That also adds to the volatility. But here's a trend line. So here's a common theme. I just went over the futures on 60-minute charts, RTY, which are the small caps right here, ES, the S&P 500, and NQ, and they all have nice clean trend lines. So you want a high probability short entry or get out of your longs. Wait until these trend lines go, particularly those large caps. And there's a lot of things right now in the market that lead me to believe it'll be a pretty quick move, and it usually is. So again, if you want to wait a day or two after, you're going to have missed an objective short entry. So I'm giving these levels so you can jump on. That's trading. If you're active trading, if you're an investor, long-term trend lines or long-term trends and trend indicators are still bullish. Don't worry about this stuff. Right now, we're looking for a correction. When I'm talking about a top, it doesn't have to be the ultimate top in the stock market. I'm talking a top before a tradable correction, and that means 10% or more. We're going to get into the financials in just a second, and I want to just go to the VIX right now. Let me go there because that'll be a potential trading up for you. So let me load that chart. Let's go right here, and we're going to go VIX, the VIX Volatility Index, and we're going to go to this board right here. So what you're looking at is, the most important thing. This is just a cleaned up version. I do have some potential targets for the VIX. You can't trade the VIX directly. You can buy options on the VIX. You can buy futures on the VIX. You can buy options on those futures. So that's actually what you're buying when you buy the options, not the spot VIX. But you can also, if you don't trade options or futures, VXX, TVIX, there's quite a few VIX ETNs out there. So let me just show you what I'm looking at. We have some pretty big, just like the indexes have negative divergence, the S&P 500 and NASDAQ, we have positive divergence on the VIX. And I like to look for those. These are our divergent lows. That was a divergent low. This was a divergent low right here. That was divergence. That actually extended. That was a little divergence there. And each time we had a small divergent low right here, pop. We had an even bigger divergent low there, pop. Little correction and another leg up off that bigger divergent low. Now we have a much larger divergent low right there. And again, I can go back to this chart and you'll see all the divergences going back for years. And these divergent lows, this is not mere coincidence because the VIX doesn't move directly inversely to the S&P 500 but for the most part. And when the VIX spikes, those are during corrections in the stock market. So if we look for these divergent lows, we look pullbacks to support, like here, that was a support zone. That's where you get in, and then of course you get a trend line break or some other buy signal, all the better. Now what I wanted to show you, let me flip back to that what I call cleaner board here. There's potential targets. Let's turn off all the lines and let me show you something here. When you look at this, to me, this looks somewhat like an EKG. I mean, I'm a very visual person. That's why I love technical analysis. And, there's somewhat of a pattern here. It's not an exact pattern. You can't time it, load up, but it's a rough pattern that in a measured amount, it's about every 2 months, sometimes a little less, usually a little bit under 2 months, you get these pops here. And I'm talking about pop. So again, it looks like an EKG with these blips up, and when you measure them out and you go look at it, there's a little pop. These pops tend to be, of course, some are a lot bigger than others. So if it's an EKG, it's somebody with, a regular heartbeat there. But there it is. Roughly every 2 months. And so we're due up soon, as you can see there. You never see it. I don't see it go flat and stay flat for an extended period of time. Comes down to those levels. And again, it comes down to often support levels. These are all support levels, resistance levels above. And let me just measure out that last low right there in the VIX before the pop. And I'm just going to tell you percentage terms, that was an 88% pop. So we didn't even have much. We had that drop I showed you earlier on ES, which was again, telegraphed in advance with that divergent high in the breakdown on the 60-minute chart, and that gave you an 88% pop, in just a couple of weeks there in the VIX. It has now been 1.9 months. The pop before that, let's just go back and measure. There was this one from here, right here, from that low. It was exactly the same thing, 1.9 months. There was a low right there in the VIX. Let's measure it out. And I'm looking at my pop-up box on the left, guys. That one was about 2.5 months right there. And you get the point. You can measure these out yourself. That's 1.8 months. So then we're at 1.9. We're due up. And again, you can't bet the farm because sometimes you go longer, sometimes it's shorter. But align it with what's going on in the stock market, and let's get back to that right now. Let's put these lines on and let's talk financials. Okay, for many weeks I've been eyeing and waiting patiently for a sell signal on the financials. I got that last week with a breakdown in XLF right there, and nothing but red sticks so far. The only green stick, meaning we closed positive that day, and it was almost a flat day, slightly positive, was right there. So again, nothing but red sticks. We're now taking out that what I call the BOD, or benefit of the doubt, trend line. We're down another 1% today. We all see things different. Maybe I'll prove to be wrong, but bulls in the financial sector think that they see this as being the same as this, and it may be, and then I'm wrong. I think it's the beginning of much more, and if so, again, I've given you my price targets. I just want to say so far so good. And what makes this one different? What I see and that others might not see, I see divergences that have been building, and typically the bigger these divergences get, and there's many other factors too that go in, both technically and fundamentally, but that's one of them, and that indicates that this seemingly quote-unquote innocuous little pullback here, where the dip buyers are stepping in, may prove to be much more. And that's where you'll know, dip buyers should, and again I'll put it in quotation, should be stepping in to buy at support, like these reaction lows, that previous reaction low right there we're coming up on soon, or that trend line. And that's where you get a change of characters when they don't, or when they step in and buy, but then that buying gets sold into, and then you take out the support. Like again, you take out T1, that first target around 35, 33. I think we'll get a bounce off it. I think you can actively trade. I'll have more confidence if and when we get there, depending on how the intraday charts look, but I would expect it to go like that, and then get a little bounce, and then break T1 and go all the way down to T2 around 32.83. So I just wanted to say that's still all the better today. If I've been talking about it for a week, how could I not like it more today? That's an additional check mark, being down 1% in the financials. Now another check mark been waiting. JP Morgan is the 800-pound gorilla in the financial sector. It's the largest of them all, and at almost 500 billion. And you can see it took out the trend line. That trend line there, and with an impulsive red candle today, we're down 1.65. We're now at the BOD line, because remember I have horizontal price support right below the trend line, about 157, and so the trend line break is a breakdown. It is a check mark, but I'll get the real check mark if and when 157 goes with conviction, especially a solid, big old red candle, or at least even if it's not a big candle, the further we get below that level, especially on a closing basis, the greater the odds are that we're going to go on to hit my next target there at about 146.50, and so forth and so on. So there's a check mark. That's what I wanted to point out on JP Morgan, which we didn't have last week. I was waiting for that one. Bank of America already broke down last Wednesday, back tested in an impulsive rejection. Those were 1 and then 2 check marks, the breakdown candle, the break and close below, then the impulsive rejection on the back test, and another check mark today. We're down another 1%. We continue to fall. I don't see anything stopping this one until at least that first target, about 40.39. Berkshire, a little room to go. We broke the minor trend line, and then so forth and so on. I covered these extensively last week. There's Wells Fargo right on the line now, on the BOD line, the benefit of the doubt. But remember, it already broke down here, broke trend right there. This is just the next support, then this one, and so forth and so on. So we'll continue to watch these, and I'll continue to update them as I get more, what I call check marks. Citigroup broke down and hasn't looked back. Look at that, nothing but red sticks. 1, 2, 3, 4, and now 5, down another 1.4%. So you see the selling starting to accelerate. And here's what the buyers did last time. We had a breakdown there, and they stepped in where they should have, at support. And then they did it again there, and that was bullish. But what happened is we broke a much larger trend line this time around, and so therefore, minor, bounces and counter trend rallies aside, I think we're going quite a bit lower. All right, so we'll leave it on Schwab, which has also broken down now. I'll hit BlackRock, and then we'll leave it alone. Let's go to KRE. I think there's a lot of juice on the regional bank shorts. Those have broken down, and I've also did an extensive video on those, so I'm not going to spend too much time. But more check marks. That's the point I'm trying to make. More selling. Look at this selling starting to accelerate. Sell signals and additional support levels being broken since my last update there. So let's move on. And again, the takeaway is, I've been saying for many months now, the S&P isn't going to break down until the financials and industrials break down. So now let's roll into those. And it's not an impulsive breakdown, but we're moving steadily lower following the recent trendline break. And again, I'm referring to the primary uptrend line, also off the March 2020 lows. Mostly red sticks, and those green sticks have been just minor, pretty much flat days, coming up on that 101.37 first target support, plus the 50-day moving average is just above that as well. So far so good, and the further we go down, the better off we are for the short case. XLB, basic materials, is not going to move the needle on the S&P as much as the industrials and financials, but it does speak to what's going on, because if basic materials go down, I'm going to get to commodities in a second. I've been very long-term bullish and all the way bullish on commodities for a while, but cooled off lately. Said look, time to take profits. Even called a top in lumber, and lumber continues to fall. So I think crude will be up next, and quite a few others have fallen. So, as you know, we've had hit and run opportunities, long and short, on the commodities lately. But this one, obviously, basic materials, it will speak to what people think are going on, what market participants think is going on in the overall market. Because if basic materials breaks down and starts to correct, it shows that the outlook for future economic growth is not as bright. In other words, okay, housing market, that's going to imply the housing market's going to cool down. Basic materials is going to go up and down with the housing market, obviously. The cement bricks to build the houses, the lumber, and everything else. So that's all in there. So I wanted to mention that it's right on trendline support. If and when it breaks down, as I suspect it will, because we put in a divergent high recently, minimum target's about $79. If and when that's taken out, there'll be a little stop along the way here. I need to give you one other target. about 76 and a quarter, and then 72.45 I think we can come back to. Next up is gold. I made a point to fire this one off in pre-market. If you trade futures, you can get a jump on these things. So gold, the story on gold, I've been and remain longer term bullish, but looking for some near-term pressure on gold due to the my bullish outlook, near-term bullish outlook for the dollar. And of course the near-term bearish outlook for gold. Most importantly, would never mention gold as a short or reason to get out of your longs or hold off if we couldn't make a bearish case for it. At least, again, this is a 60-minute chart. So, I'm not looking at a daily or a weekly chart. Those speak more to the longer term time frame. This is intermediate, days to weeks here on this shorter term time frame. So that was our divergent high right there, the peak, and then we broke down the minor trend line, went on to hit the larger, more significant uptrend line on the 60-minute chart, and that's where I left you last week. I think we were right there, and it was really nice because we had not one but dual support levels. So that's what I call a high probability short entry, when not one but two key levels get taken out. And the more eyes that see it, some eyes see this trend line, other eyes might only be good at recognizing horizontal levels like 1876 or 1877. So when they both get taken out at the same time, you have two different subset, or potentially two different subset of traders looking at it. So bulls would have had or should have had a stop under there. Again, if you're an active trader. Speaking to active trading, swing trading, not long-term investor. Nothing wrong with riding out any pullbacks, and this is where we might go. And I think we will go if and when today's lows are taken out. So just to fast forward, pointed this out this morning right there. We were right on that first target of 18. That's 1848 if you round that up, 1847.92. And so you could have covered a short there and reversed for a quick bounce trade. Now, there's some minor, that should be more of a support zone. I fired the post off as quick as I could this morning to get it out to you guys when I saw we were trading there. But I'm going to call that more of a support or resistance zone, I'm sorry, because we had a reaction low right here. We had several reactions right here. We had several reactions right there. So this is where, and I did reverse back to, I'm not going to try to get every penny, and then we could rally up there. And if we do, let me say this, you can continue to short or get out of your longs if you took the bounce trade off that level at 1876, and or the trend line. Maybe we go for a back test of the trend line. Who knows? Maybe the correction's over. All I know is this is an objective time to short for the next leg down, being that we already hit that 1848 target once, and we may get another reaction, and that's when your next objective short or sell signal will come on a break of that level. Now take us down to 1802, and if we get there, that's, I think, would be it. And again, we may not get there. Gold has been in a uptrend, it's bullish, and you now have also 60-minute divergence here on the 60-minute time frame. So it's very possible this was it. So if you're going to short for another leg down, don't get married to it. I mean, don't just hold a short as we go on. If we take back the trend line and we move up, we could if these divergences play out. But these divergences may get burned through, so we'll watch. I think we come back down. That's my guess. So, and I gave you levels also on GLD as well, in case you don't trade futures. And if you do trade, there's the correction so far. That's the daily chart, and that's what it looks like. Same thing, just don't have all the trades. You see a lot of gaps in gold because gold trades around the world. So, it's not a U.S. security. GLD is an ETF that tracks it, but it's tracking the underlying asset. And that's why you have gaps, because a lot of the moves in gold occur overnight, or anywhere outside the 9:30 a.m. to 4 p.m. regular trading session. And that's where we were in pre-market. We were down at support. So there's your little bounce trade. And again, some levels to watch there. And there's some potential divergence as well in the 60-minute chart. So that may be it for gold. I just wanted to point that out. Hard to say. Whether it is or isn't will probably depend on how much more upside we're going to get in the dollar. Dollar has pulled back to that 93.77 former resistance support. This is really the level now. I think I mentioned that last week that we had that previous reaction high. I believe I drew a line there and talked about that and didn't add that line to my chart. I probably drew it in with the screen draw tools, but there it is. That is now the next resistance that needs to get taken out. 90, about 90, 60, almost 95, 92. Previous reaction high. So if we can break that, takes us up to 90, 80. And if that gets taken out, up there to that 91,373. If that plays out, and gold, the dollar still remains in a near-term uptrend. You can see like this, if you put it that way, a little price channel going up, and that's what's been putting pressure, and would, if that continues to pan out, would continue to put pressure on gold. Otherwise, if this is it, and the dollar is going to, resume its larger downtrend, then gold will rally most likely. Okay, next up, lumber. For quite a while, I've been highlighting lumber as one of the best, most profitable or lucrative potential shorting ops out there. It was in a parabolic uptrend, and I've pointed out many times. Let me just color this toolbar. That lumber has a pretty predictable pattern. It quite often moves up with normal traditional trend lines, but unlike most securities, it goes parabolic quite often, and that is usually, you look for these parabolic advances. This is a parabolic trend line, we had one here. So this was our last one right here, and that was drawn out, and I actually believe it was covered the day I updated it. We were here about 100. Well, I'm trying to color that or highlight that. It was about 167% run from this point, what I was saying, from the previous highs before COVID even hit. Lumber still went up 170%. If you measure it from the lows after the pandemic, set in back here in early 2020, it was a 542% rally. So I haven't touched these lines since the last update, and so that was it right there, and that was it. That ended it. And then right after that, you can see right here, we broke the parabolic trend line. Again, this is, I can't draw it with these screen draw tools, so I'm just clicking on this, and so far it's down about 40-something% off the highs, 43%, and with more to go, because as I said before, once the parabolic run ends, you have a almost equally strong downtrend. That's just the nature of the beast, lumber. So you got to get in, and don't wait too long. And it's been a extremely profitable trade so far. And even then, there's been opportunities to micromanage that trade. Let's see, I've got this one back here, right after, was it that one or this one? These are videos. This one was on the April 22nd trade ideas. We had just broken, this is a screenshot, actually the actual video being paused right there. We had just broken the trend line there, right there, that minor trend line. And so I was drawing, these are the screen draw tools, called it down to this line, the primary trend line on the 60-minute chart right here. With a break right there. You can see the break, meaning a reaction, and then expecting that line to break and take us back down to at least the $700 level, or ultimately at 700. That's still a swing target I have. So that was back in April. Then did another, there's been quite a few updates. This is May 12th. We were coming down to that trend line, and so these are the screen draw tools saying bounce there. Let me change that color on that. Bounce there, and then break this and head down more. That was then followed by the April 28th video, and there it is. This is that's that primary trend line. So there was a minor trend line that got us in right off the top, and then we hit that level. We consolidated on a few days and then broke it, and at that point we had a little kickback rally, and I said, that should be it. Give us the next leg down. Where are we now on lumber? And again, probably more to come. That was it. So this was that minor trend line. This is a live chart right now. There was our early sell signal. There was that secondary trend line taken out, and that was the last update there, and that video said more downside to come, and that's what we've gotten. And again, it's about, I think it's 45% so far. Let me measure it out. Yeah, about 43% so far. And no end in sight, in my opinion. Will there be bounces along the way? Absolutely. But keep in mind, this is a big one right here, because lumber, This speaks to the housing market and everything else that's going on. I'm trying to get rid of this trend line, guys. Sorry about that. Just want that one off there because that was just a measuring line. One thing to watch right now, if lumber can turn around soon and start to rally and take out this minor downtrend line, it can do so with positive divergences in place. Now, keep in mind, it had some almost divergences right there, and it did take out a little trend line, but look at that. They sold into it. So this is the nature of a one-sided trade, and everybody was long and bullish. You get too many longs, too many bulls in there, not enough shorts. All of a sudden, when you turn around, and that's why I said when lumber falls, it's a pretty painful ride to be in if you're on the wrong side. In other words, if you're long after a parabolic trend ends. And there it is. It's been falling. Now that is going to segue into the next thing I wanted to update. Again, longer term, yeah, I'm still bullish on lumber and all other commodities, but it's going to be, we could, have some softness, more downside for a while. One of the things I've been highlighting is DJP. That's an all-inclusive commodities ETF. Has everything in there, including, I believe, lumber. If I'm not mistaken, I know it has metals and oil and agricultural commodities, and so that's why I've been using that as a proxy. And so that's it. We're in this uptrend channel, so we're in a bull trend, bull market, but we have these little uptrend lines I've highlighted along the way within the channel, and also when you hit the top of the channel, as we did right there, look, that's it. You typically want to be exiting longs if you're an active trader and or shorting for a pullback to the top at the bottom of the channel. You want to be going long at the bottom of the channel, long at support, either short or at the very minimum hold off on buying new commodity positions. And again, each of these individual commodities, gold, crude, natural gas, corn, soybeans, they have their own unique technicals, and so that's why we've been able to hit and run. We even had some longs a couple weeks ago here at that point in the grains and some other things, and we took that bounce. But again, my preference was to get in, get out. And at this point in time, I'm going to show you something here. We have some divergence starting to form here, so that could lead to more downside. And again, the MO is typically once you hit the top of the channel, you may ride it a little bit, but your next stop is quite often the bottom of the channel. So that's that. Okay, I'll do a very quick update on AMC because there's something technically significant today. I've been highlighting back here. I had this triangle, and I said whichever way that broke would likely determine the next tradable trend, and it broke to the downside as highlighted last week, and that gave us a drop from there of about 27%. So that was certainly the next tradable trend. We hit that. That turned out to be support last week, so I put a line there. 41.23, give or take. But when you extend, and what I've done here, the triangle I had back then would look like this. And so when you extend the downtrend line, that was taken out today. And I think we closed there on Friday. We popped it today, but we do have resistance right now, right about here from about $57.50 up to about $60. Why is that resistance? Well, you have multiple reactions right here that go up to about $60 right there, and including a reaction there. So this is resistance, and it's simple, or fairly simple, no guarantees, but let me change tools. If we can pop it, that's bullish, and then very bullish if the AMC can take out those previous highs. But as of now, it's still below the highs it put in weeks ago, and so their whole short squeeze narrative, it could still play out. I'm talking about the Reddit bull, the ones that call themselves the apes, Planet of the Apes, band together, squeeze out the institutions. Yeah, is it possible? Sure. Is it probable? No, because typically if you're going to do it, once you get a short squeeze, once you get that momentum going, it builds and builds and builds, and that's what it's all about. You get almost a parabolic top like that, like in lumber, and then a correction. So far, this is quirky. I mean, they were yet to take out those highs from a few weeks ago, but it's not going down either. So now at this point, I have a different triangle, and these are the lines I'm looking at. So that's it. That's your uptrend line. There's the downtrend line. We are at resistance. I think we'll probably fail here because, as I said, I don't think the institutions are going to repeat the same mistake twice at this point. Maybe I'll be proven wrong, but that is an objective level too short right here. Or if you are long, if you want long on the breakout above the trend line, an objective level to book profits, or a lot of ways to trade. You know, if you're long and you're bullish and you think there's more upside and they're going to get that squeeze, set your stops somewhat below and trail up your stops. Let it run. Usually a short squeeze is going to look like that, a mostly unidirectional run. And if you are the bearish camp right now and you think it's going to go down, short it here with a stop somewhat above 61 for a minimum swing down to that uptrend line and 47-ish level right there. That would give you a, from where we're at right now, if I can zero in, that would be about a 20% trade if you got that. Little bit of support right there. If you want an early target, call it about 52. The bottom of today's gap, and 52, 51.50, somewhere in there, and some price resistance. Let me add that level. There it is. Okay. And that's about it. Let's just stop here, get the video out to you guys. No, I told you cryptos, GBTC, Bitcoin hit that second target. One day drop below it. Should have opened the door. I thought it would to T3, but they were able to snap right back up above that T2 support, and so we're getting the bounce. It was an overshoot. It happened to be a little whipsaw there. I still maintain that T3 target. It's just how far do we bounce before then? And then Ethereum ETCG was the other one. That hit, and it remains on my $31 target. Remember, this one's been called down from up here. It was a long trade idea back here, back when it broke out above, I don't forget, a couple levels I gave you, including 2240 and I think 1733, but 31-ish is support, and we've been trading on it 1, 2, 3, 4, 5 consecutive days. So the bounce here has been lackluster. The buyers aren't stepping in. Doesn't mean, you know, right now they're successfully defending 31, but the point is, if they take out the recent lows from last week, let's just say Friday's lows, that should open the door to the next target down there, about 22.44. All right, I'm going to wrap it up here, get the video out to you guys. This has been Randy Finney with Right Side of the Chart. Have a great day.